Porinju Veliyath is Managing Director and Portfolio Manager with Equity Intelligence India. Porinju, good morning.
Good morning, Prashant. Thank you.
Porinju, you are an unusual guest here on the channel, and I'll tell you why. Because most guests, market guests and fund managers that I interview, and I think that can be said for most news channels, are not from Kerala. I think that's the easiest way to describe it. They can be from Bombay, from Delhi, from Ahmedabad, from Rajasthan, from wherever, but not from Kerala. Mallus generally aren't seen to be very adept at making a lot of money, but you are. You have been successful, and you've been running this portfolio management service for a while, and the track record is pretty good. Just talk us through your journey. How did you get started? What's your background? And where are you now?
Oh, thank you, Prashant.
By the way, I'm a fellow Mallu, so you have company. Go on.
I know, thank you. So people think that you invited me being a Keralite anyway. See, I was in Mumbai in the 90s, from 90 to 99.
Right.
Just maybe because of the traffic situation in Mumbai. And, I thought I better go to my hometown. And that's how it all happened. Maybe I found... I took a very good decision when it comes to value investing, because maybe in that real value investing style, maybe it's better to stay in a place, which is not really crowded with too much of information and too much of networking. The less but higher quality information and ideas, that can create better wealth. I hope that situation has helped me in creating wealth.
Yeah. I was reading your profile, and you worked as a broker, you worked as a research analyst, you've done the drill basically, right? And then finally you decided that managing money is what you want to do.
Yes, I started my career as a floor trader in the Mumbai Stock Exchange in 1990 under Kotak Securities, and later I shifted to Parag Parikh Securities. It's very sad Mr. Parag Parikh is no more, and it was a big shock to the value investing community in this country. I feel really bad about it. Anyway, so there, he was one of the first new generation broker who gave so much importance to the real equity research and value picking. And so I think that exposure has given me a lot of mileage, and working with institutions and in dealing rooms, in research, and on the floor of stock market. So all these things were, I think, what do you say, a better feel of the markets, interacting with the promoters and understanding, the fraudulent activities of the promoters or how the stock is being manipulated. So those, the market was very crude in 90s, if you remember. So that ground level experience has given me, it has taught me a lot of things. That could be the reason perhaps I go very different from the crowd or the herd mentality in the market. I think I'm talked as a contrarian investor sometimes.
Yes. So what does a value investor really do? I did a series on value investing recently, and I got people like Sanjay Bhattacharya, like Ramdev Agarwal and others on the show to talk about value investing. The basic concept is you try to buy cheap, sell high, right? Buy something which is trading at less than what it's actually worth for. That's what value investing is, broken down in the simplest terms. Recently though, actually not recently, it's been true for a while, many have argued that in the Indian context, it's very hard to be a value investor. In India, with the market maybe not regulated as well, too much going on, which is not exactly in the boundaries of what is legal, and very tough to find out what is good, what is bad. It's good to stick with large caps. Stick with growth companies which are doing well, which have got a proven track record, and that's how you'll make money. Big will get bigger, and you should be there. You're suggesting something else, right? You're saying
what you told is not value investing. That's again the herd mentality. Now, see, India, you always talk about it. India has very large number of listed companies, and Indian economy is so much supportive of investing or value investing in the smaller companies too, considering the structure of our economy. But most people are after the very 100, 200 companies in India, and the media also covering only so much companies. But you see the real gems come out of the stocks beyond those blue chips or already known companies. And that is something I have been practicing all my 25 years of profession, and which has definitely yielded much higher returns than the market.
Would you say so basically what you're saying is you buy something when it's a small company, right?
First of all, I think the basic thing, Prashant, one should understand what is stock market. See, somebody has got investable funds of say 5 lakhs, 10 lakh rupees. Is stock market important for him? I don't think so. See, equity investing is something different. People always are concerned, what about the stock market? What's happening in the market? What will be the market next month or next week?
The favorite
I can tell you,
market kaisa lag raha hai? Bazaar kaisa?
See, about stock market, there is only one thing.
Fair enough.
See, the last 100 years, stock market was good. I mean, not stock market. Equity investing was good. And it was the best performing asset class. And I'm telling you, next 1,000 years also, it will be the best performing asset class. For an investor, that is the only important thing.
Sure.
You see, going after the Sensex or Nifty or the stock
Fair
market.
enough. That's point number one. Don't look at the Sensex and Nifty and decide what you want to do, right? That's taken, a point taken. Now let's come to how do you go about identifying companies, Porinju? How do you get your ideas?
Yeah, see, look at values. Again, the same thing. See, keep your eyes and ears open. You know, that's generally I always talk about how the ideas coming to you, how this industry or the particular company, or you may be coming to an idea about a stock or about a company accidentally. Maybe when you are buying something from the supermarket, you may go through the product. Who's making you are liking it so much. It's a new product. Maybe that is a feature. So there could be any number of ways, or maybe a million ways a stock idea coming to you. So just keep eyes and ears open. It comes to you automatically. But explore it. Use the common sense. Make life simple. You need not complicate so much. People so much of time in the media I spend on. Now today in the morning I was listening to somebody. See, if Nifty closes below 8150, it's all gone in such a way that the country will go to dogs, if that happens. So I think that kind of irrational.
So you don't look at charts at all?
No, I don't. I don't like the chart of the past. I'm interested in the chart, for next 1 month or next 6 months.
Right.
I don't. Nobody makes.
Sure.
So I think I don't have much belief in that.
Fair enough. Okay, let's take it one by one. So you're saying the bull. Let's talk about here and now. You think we're in a bull market, and you shouldn't doubt the bull market, right? That's your view.
Definitely, we are structurally in a bull market. There's no doubt about it. Because see, again, as I told you, equity as an asset class, the businesses you are owning in this country, and we are in a very, very much better shape today than the last 10 years. I would say we have a great leader. So people have been talking so much about the Modi since the election, but that is settling down. Now people have started talking negative about it. Nothing happening on the ground level. See, nobody can do miracle, and there are a lot of reasons to be hopeful about this leader doing a lot of things. I'm telling you, without
let's
Modi,
not talk about macros. Let's talk about investing, because macros then we get lost, right? We talk about then fiscal deficit and oil and this and that, right? I mean, there are too many things, too many variables, and so you are saying the bull market is on. Don't doubt it. Let's go, and you should. The bull market will not end anytime soon. Yeah. You were saying that it will go on. So this is a great opportunity to invest and make money, right?
Yes. In stocks, not in the market.
Stocks. In stocks.
Market is important only if you have some, say, $10 billion or something like that.
Yes.
Then those kind of big managers, they have to buy the market.
Like you.
They cannot buy stocks. So if you have got, say, 100 crores, 10 crores, or 1 crore, or 10 lakh rupees, don't look at the market, look at the stocks.
Look at businesses, look at individual names. Okay, let's look at a couple of situations which you believe in, right? Let's talk about stocks which are out of favor. Now, there's a company called Jubilant Industries, which, according to data which we've got from exchanges, you've bought some shares in yesterday. That we got this from the bulk data sort of information which the exchange puts out. Jubilant has reported a big loss in the quarter. Numbers aren't looking good. One can say it's out of favor, although the stock has not done very poorly if you look at the return over the last 1 year or so. But just take that point of buying into out of favor businesses, and how have you practiced it, and what would you tell our viewers?
Yeah, this company I have been watching. Jubilant has 3 companies, listed companies in the group. This has been out of favor for quite some time. But I remember in the 90s and all, this company used to be known as VAM Organics. Vamicol was a very important product. Pidilite makes the Fevicol, the famous Fevicol with a very huge market share. This is one competitor, maybe the only competitor for them. And I think it is now named as Jivanjor, not Vemicol. They have some other, they are market leaders like in gums, making what you have it in the chewing gums kind of thing with food applications. And they have got some very good agrochemical business, very super specialty.
Fair enough.
So there is around 500 crores worth of excellent businesses other than the recently acquired retail business. This, if you exclude the retail business of Jubilant Industries, the company is worth anything like 600, 700 crores worth of market cap or enterprise value. But it came to 100 crores as on yesterday. I think yesterday and today it has moved up. But see, and they reported a huge loss because of the the Bangalore's hypermarket business. Now the management has taken their family business or the group business into this listed company for a small consideration, and now which is almost killing this company. I don't think management will allow this company to die like that. They are not that bad kind of promoters. So it's a just common sense approach. This year, if they are doing so badly last year, they have to do something with the retail, either sell it off or stop that business. In either case, I think this will be a multi-bagger. So it's like that kind of a calculation. You are speculating what the management will do. This is not a real,
You're making it sound very easy. It's not, I'm sure it's not that easy. You have a background of the company, the group in your mind, right? Okay. You studied it over the years. So you know the business and you maybe know what it is worth.
I will never buy this in PMS. What I bought yesterday was in my personal thing. I'm taking a chance.
Sure.
I love gambling like that once in a while.
Sure. But is it a gamble or is it a calculated
It's a gamble on the management's future action. So it's in which I am applying my common sense and my information, knowledge about the promoter's style, culture and quality and the fundamentals of the company and the retail what they are doing. I think they can easily sell it off and save the company. I don't think these promoters will make the minority shareholders, suffer.
Okay. All right. I just want to refer to the market for a quick bit. Suddenly, out of the blue, big selling, 145 odd points off on the Nifty, 500 points off on the Sensex. And has anything happened? Any particular news? Nothing. I mean, we've not picked up anything, but there's a sudden, it is sudden. I mean, Axis Bank is down 4, BPCL is down 4, Ambuja is down about 4% or so. There's Asian Paint, Cipla, Yes Bank, which are all down between on the higher end 4.5% to about 2.5%, 3%. Idea, Sun Pharma, Indocent is down. All sectors are in the red. There's Lupin, IDFC, NTPC. The Bank Nifty is down about 2% as well. So that's about a 450 odd point cut coming into the Bank Nifty. So 2% suddenly. I mean, this is pretty big. Any thoughts, Porinju, on what this could be?
See, this could be, FIs have been selling in the market. Sentiment is already really down. People are very scared. And market is scary sometimes, but it will scare you at times. It is quite, and you feel people become, almost hopeless, especially the trading community, they sell off everything and the market goes up. This cycle have been happening even after the new government formed in May 2014. We had many times this kind of, fall
sharp
and
moves,
sharp moves.
Yeah.
So that's what I'm telling you. See, this looking at the market, okay, this is like the large fund managers and the media people, it's very relevant. And then today, a lot of people, 99% of the people in the market, ultimately, even though they talk about value investing, they are basically gambling in the market.
Don't practice value investing.
Yeah, they talk about very long term, but they are looking at very short term.
I agree.
So this is most participants in the market. So this kind of movements quite natural. And a few stocks today, some of the companies have got very large weightage in the index. So these things, I don't think this is something very scary. When you see 200 points Nifty going down or 150 points, is it scary? I don't think. It's only a small percentage of this thing. Yeah. And on sentiment, it moves up and down.
Yeah, absolutely.
Small investors should ignore them.
Absolutely. Yeah, I mean, and of course the media has got a role to play in this as well. I mean, the big breaking graphics come up, market sell off, big crash, and of course I guess sometimes it's justified, but those are extreme situations. Like for example, what happened in the financial crisis. Those are
even that financial crisis did not affect investors. See, from 20,000, Sensex went to 8,000. Yeah. Did the investors get hurt? I don't think so. Yeah. If they had the conviction about the companies,
no, but if I can put the argument that if you're buying stocks, not the market, right? unless you've got $1 billion. If that is true, then you're also losing money in stocks. The Nifty, the Sensex may have gone to 8 and now back at whatever, 30,000. But stocks are still 1/4, 1/5 if you bought the wrong ones, basically.
Yeah, that in the long term, that's one fundamental mistake. Because
Fundamental
of the market
mistake,
sentiment, when
Of course.
Sensex went to 8,000 and below,
Yeah.
unless you are in dire need of liquidating the stock,
Yeah.
I think if you are in the right stock, it was not a problem.
No, absolutely. 107. But I'm just curious as to what's going on. Not scaring anyone, but 350 odd points. The cut is pretty sharp, pretty steep, and there is no real news per se which we've heard at this stage. But well, it does happen once in a while, and that's what we are seeing at this stage. So the big losers are all at the bottom of your screen. And I think we are now for the week. I mean, the last week's last session was Thursday, and we had a big, massive move, 2% move. We've kind of given up all of it, and now are up absolutely flat for the week with this cut that we're seeing. But still very early days. We've been trading for about only 40 minutes or so. So this could turn, and it's turned before. So let's keep a close eye. 120 odd points on the Nifty. Let's take a quick break here. Porinju stays on with us. We're back with him on the other side, and we'll talk about the out of favor bets and a couple of other ways to approach stocks and companies as well. Back in 2.